Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of July the 15th, 2024. Now, to get started this week, we'll begin where we always do with that very important US dollar index. Now, the dollar under selling pressure, which I've talked about for several months now, that the Fed is basically being backed into a corner. He's going to likely have to cut here sooner rather than later. The traders are picking up on this at the beginning of July as we start moving lower. Vantage Point forecasting the dollar index to move lower on or about July the 3rd, which I've discussed. But now we're coming into some verified support here. That low coming in at 103.99. That's the immediate support for this particular week. So remember, the dollar is still in an uptrend while we're above 103.37. But again, there's mounting selling pressure. The indicators are confirming that. We're a little bit oversold here at 11.3 on the predicted RSI, but we've just come off of a retracement on the predicted RSI back to the 40 level. We've hit our T-cross long and we're down again. So a rather light week next week with retail sales. I don't think that's going to be a huge driver. But again, I would also warn everybody that in most cases, the dollar is strong in their fiscal fourth quarter, which ends on October the 1st. So I'm looking for some dollar strength, but probably not until about mid-August into September. But we will still have good two-way action between longs and shorts. But for now, there is a bias against the dollar based around the indicators and the breakdown below our T-cross long. Now, gold very easily has responded to that dollar weakness, moving higher off of our T cross long. Our key support level for next week, that will be 2357.92, but our monthly opening price at 2326, we're long well above that. The structural bias of gold looks far better than the US dollar here. The indicators are a little bit mixed, but any corrective moves, we can use our F8 in our software, come down to our long predicted, that level at 2384. So good buying between 2353 and 2384. Now, stocks for next week with the S&P definitely riding the wave off the anticipated Fed rate cuts here. The indicators still bullish. The MA diff cross a bit of a concern as we've crossed over down, but the predicted RSI is sitting in a good position. Neural index strength looks good. And again, the new quarterly opening price, that's kind of a big area there, guys. 54.71, we're looking to hold, preferably above that. Our monthly opening at 54.71. And again, very good year so far. We're sitting at 47.45 on the yearly opening price, but nothing goes straight up and nothing goes straight down. We should see some kind of corrective move, but that's likely going to be contained by the T-cross long at 55.19. Again, for day traders, we can use our F8. You can see we're riding every single day. We're in contact with the VP long predicted. Very good positioning here for Monday's trading with the predicted low, 55.84. But again, we should be cautious. Even though we are high, it doesn't mean it can continue. Now, when we look at Bitcoin, a slow buy signal starting to form here. The only thing stopping the Bitcoin contracts from extending higher is the T-cross long. And that current level right now, that's coming in at about 59,381. Very strong support down to the about 53,009, approximately 963. We came down this past week to 54 and we saw buying. So again, we can actually put a trend line on the, very easy to put a trend line on this. We can see if we go like that we've got a downside trend line there. So once again, we're looking for the T-cross long to break. That's now 59,381. We break that, then we can extend higher. That's the move I would be looking for. But again, we've got to get back. A minimum retracement here would be 61,933, which is our quarterly opening. Then we would reassess, but again, our MA diff cross is warning us that we are getting ready to go higher. We've got a short-term crossover, a medium-term crossover appears imminent, but the T-cross long, again, guys, 59,381, that's the level we must break. Now, when we look at that in comparison to the European equities, you can see the European equities still doing quite well, extending following the US equities higher. Everything looks good for the DAX to extend. Very strong resistance up at the 18,855 mark. If we can break through there, we can extend higher, but that, in my respectful opinion, only will depend if the US equities can continue to advance. The indicators do look pretty good, but a retracement certainly, I could see that in the cards. We would keep a very close eye on the VIX to see if we have any signal here that suggests that that could happen. We do have an MA diff cross to the upside, but we're not getting any buying down here. But again, that is something to be concerned with. The additional indicators in VP are suggesting we still have further downside, but it is a mixed signal here. So be very, very cautious in this coming week. Now, when we look at some of our main Forex pairs, the Euro US, the number one traded Forex pair, excuse me. Once again, here, we want to avoid the media noise. They said that the Euro would sell off because of the European elections. None of that came to fruition, guys. The inverse correlation between the Euro and the dollar index is about 99.9%. So the dollar index down, the Euro goes up, despite what they believe is going to happen with these elections. And again, when we look at the main indicators, there is some concern here with that MA diff cross, but the dollar being under pressure is pushing the euro higher. 110.38 would be our upside target, which is the current yearly opening price that this pair has been below the entire calendar year. We need to break above that area if we're going to extend higher. That is the area that I would be targeting, but make sure you're taking profit on the way up here, guys, because again, there is still a lot of just as many issues in Europe as there is everywhere else, and that we need to break through that particular level. But for next week, again, our T cross long is 108. There's significant support there. If we click on our F8 in our VP software, we get that additional support of the long predicted 108.44. So for Monday's low, we're looking at a pullback to about 108.74. I think we can pull back a little deeper than that, and we can reassess because we've got 89.3 on the predicted RSI. We do have an MA diff cross to the downside. So the pair could be responding to the softer CPI data than the PPI data was a little bit slightly stronger, but not enough to move the needle on dollar weakness. So again, just be mindful that if we can't hold this level up here, we could be looking at a deeper retracement to the 107.32 area. Now, US Swiss franc again continues as I had stated last week. We just don't have any buyers on this particular pair. More money moving into the Swiss franc than the dollar for now. Potentially for a flight to safety here, but really just sideways action as we move into summer trade. The T cross long 89.73. We need to break through that level, but as you can see, the predicted differences are all pointing down. We've broken this is the second breach of the 40 level of the predicted RSI, and in most cases, this is a real move to the downside. So the likelihood that we move lower next week is very, very strong, probably 70 to 80%. Now, the pound dollar has managed to clear its current yearly opening price yet again, but our main area, the one thing that I find very interesting about this is our T-cross long has crossed over our yearly opening price, and in most cases, that's a pretty bullish move. You can see we tried to do that back in early June, late May, but we couldn't hold it, and it went back down, but a very shallow retracement, and we've moved up aggressively now. So when we look at this, we always want to make sure we're backing our VP charts out a little bit to see if we see any other verified resistance high. 128.62, there is a level up there, so be a little bit cautious of a bull trap up here. But I don't see any real big recovery in the dollar till probably early September, mid-August. But once again, the market reacting to that CPI data, and it could be a false break. But right now, the most recent verified resistance high, 128.60, we want to make sure we're holding above that area. When we click on our F8, we can further assess that our long predicted 128.68, that's the area we want to keep an eye on. Very strong close, almost at the 130. It's been a while since the pound's been up this high, guys, and I think it has room to extend. A little bit of a concern with that predicted RSI at 92.6, suggesting we could get a pullback, but that would be a buying opportunity if nothing else. Now, we have a lot of eyes on the dollar yen as it's finally pushing lower. Once again, we talked about this one in last week's outlook, that I would anticipate some type of Japan intervention. This is a pretty solid sell signal on this, but guys, this is the carry trade, and you have a lot of traders that do not want to exit this long trade because of the interest rate differential between the Bank of Japan and the Fed. So again, right now, I think our next verified support low is 154.55. We could hit that level very quickly if the market believes the Fed is going to have to cut more than once this year. So July is not really much of a wild card. He could do a cut, but I think it's very unlikely. September, November, December, I could see a minimum of 2 cuts, maybe 3. But again, I would have already, if it were me, I would have already have cut twice already this year based on the data. Now, the US Canadian pair, again, it's going to be a tricky week for the Canadian dollar here. We're just hovering below our T cross long. We've got our quarterly opening 136.72. The monthly matches that. The yearly 132.50. So, in order to move to 132.50, we've got to break down out of this area here and make a clean break of it. Now, that could be tricky because, again, we want to make sure we're looking closely at oil. And oil right now, again, has a very high correlation to, again, the US-Canadian pair. So if crude oil, light sweet crude oil, which does have still has a pretty strong signal to it, if it can move higher, then that would push U.S. Canada towards the 132.50 area in the weeks ahead. So a lot is riding on stocks and oil going high, commodities in general going higher. And as you can see, there is another buy signal forming on oil right off of our T cross long at 81.75. So in theory, that should put downward pressure on this particular pair. All of our resistance for next week is at 136.72. Any break above that or near that area is likely a pretty decent short. Now, our predicted high for Monday with VantagePoint is 136.83, so a significant amount of resistance up there, but a very mixed bag in indicators, guys. The neural index strength, and we have an MA diff cross to the upside, but it's corrective to the upside unless we break through and stay above the 137 area. Now, the Aussie, again, advancing pretty strong, but once again, guys, this is it's not a subjective, it's an objective number. 68.12. Yes, the Aussie looks bullish by this chart, but it's actually still bearish on the year. If it's going to fail, 68.12 or just above that area, but if we get above this area, then we have the opportunity for fresh longs, potentially longer term buys on this particular pair. If we look at it over a 4-year period, you can see that the Aussie is grossly undervalued at this particular level. And if we come back further than that, and we look back in the 5 to 10 year mark, again, it wasn't that long ago where this pair was trading above parity. So again, that's something to consider and keep your eye on. You can see at 97 cents. So I think we do have some opportunity here. We just need confirmation. We need to stay above that T-cross long and our monthly opening price. But the main thing we need to do is break through that yearly opening price at 68.12 and stay above that. And that would start a new trend. This is why we want to avoid that rolling performance model, guys, because we don't want to move the goalpost. We want to know, is this pair bullish or bearish on the year? The answer is bearish. It has bullish momentum, but in order for it to actually be bullish on the year, we've got to get above 68.12. The same thing would apply to the Kiwi here. But the Kiwi, in my respectful opinion only, is better value. And if the Aussie breaks above its yearly opening price, we have a significant gap between where we are in the Kiwi right now and its yearly opening price at 68.18. So I believe, again, this could show up in Australia and New Zealand this coming week. When we look at, is it possible the Aussie could rise after that data last week? I believe it is possible. We have indicators here that are suggesting there's weakness forming in the Australia-New Zealand pair. So if that's the case, that would slightly weaken the Aussie around its yearly opening price and push the New Zealand US higher. So it very much is like a chess game with some of these pairs and some of the different commodities to understand how they really work. So with that said, this is the VantagePoint AI Market Outlook for the week of July the 15th, 2024.